Alright, so this week we had some earnings from 80% of the FANG companies in the names of Facebook, Amazon, Apple and Alphabet or Google, of which I own all, so we'll be taking a look at how that affected the stock. I'm pretty sure you lot have seen what's been happening on the side of Kodak with that crazy share price movement, so I'll briefly touch on that. But of course, before we get into all of that, let's take a look at my portfolio, including some of my biggest winners and biggest losers this week. So those of you with a keen eye may have noticed that my portfolio valuation has gone down a bit since my last video, and this is because I have sold some stuff, specifically one of my ETFs, ticker symbol IWDA, and my initial purpose for buying it was for diversified growth, and the reason I got rid of it was because I felt like I'm still quite young, and so I feel like I should be able to take on more risks without greatly affecting my overall portfolio position. And being that it's so largely diversified, its growth is quite slow, and right now I would prefer to be in something that has the ability to grow at a more efficient rate. And then I also decided to get rid of some other stocks as well in the names of Nike, Walmart and a few others here and there, in an attempt to benefit from better opportunities of growth from other companies in my portfolio. So I've also re-evaluated my criteria for buying dividend stocks, one of them being that the yield should at least be 3%, so that effectively automatically booted out some of my holdings, and this explains why my weekly graph looks so abstract, and also because I made my bi-weekly round of investments this week. So yeah, it's quite an ugly looking graph, but it is what it is. If we take a look at my pies, we can see that my dividends are currently benefiting from the most gains, whilst my risky allocations have been suffering the most, which makes complete sense given the way the overall market acted over the last 2 weeks, so I can't complain with that. So starting with my top loser this week, we have Carnival, and I don't think I really need to go into depth with why this stock has fallen, what is it, 12.5% this week. It's been a stock and essentially an industry that has been hinging on the factors out of its control, and I think people are starting to come to the realization of the mess that we're in, and that there won't be this quick V-shaped recovery to normal or anything even near that idea. And above all of this, there have been a number of pushbacks as to when they'll be allowed to operate, and they're burning through cash at a rate of $900 million a month. So it's not surprising at the drop that we're looking at here. And just take a look at that 1 year graph, it looks absolutely disgusting. Am I going to get out of it? Not yet. I think, as always, I'll keep this in my risky part of my portfolio and just continue to average down my cost and see, hopefully this can bounce back. And I know this is not going to happen this year, it may not even happen in the first half of next year, but I'm gripping on to the hope that the share price of this stock goes back to at least 250. Alright, so next up we have Virgin Galactic. So yeah, Virgin Galactic this week fell 7.61%. They actually unveiled the interior of their new space passenger cross-galactic Star Wars looking like alienated ship that to me just looks straight up trash. I'm sorry, but if I'm paying, what is it, 250 bags to travel to space, I don't want to be looking through these small circular windows. I want to be looking through a singular wide pane glass or whatever material the windows are made out from, and to me it just looks like there's so much room to add more viewing points and positions, but I'm sure there are valid reasons as to why it's built the way it is, so I guess I'll just have to accept that. But if they're trying to get new stylish futuristic designs, then just hit me up and I'm sure I can provide that. But yeah, I think similarly to the travel industry, COVID is having an impact on when Virgin Galactic will be able to finally take passengers up to space. They also seem to be carrying out tests which feel like they've been doing forever, and however necessary this is, I think investors are itching for concrete dates as to when customers like you or I don't even know why I said I have no business to go into space, so just leave me out of that. But people just want to know when consumers can actually start using their services, and thus Virgin Galactic can actually start generating meaningful revenue. So I think that's one of the reasons why it dropped 7.6% this week. Okay, so coming up to our big movers this week, both of which have moved after some big earning announcements. Let's begin by talking about UPS, which I actually first purchased a couple of weeks ago as part of my dividend allocation, and it was actually brought to my attention whilst watching CNBC, and it's a fairly solid company, but for me the biggest risk is the amount of debt it currently inherits. But it has been decreasing its debt over the last 5 years, and it's able to cover its debt well enough through its operating cash flow, so it's not really that big of an issue for me at the moment. But anyway, from the boost of online sales amid lockdown, the company mentioned that revenues jumped 13.4% in the second quarter compared to last year, which was nearly a $3 billion increase from the analyst's forecast. Their net income also drastically increased, and hear me out when I say this. They beat EPS estimates as it totaled $2.13 per share versus a $1.07 per share forecast. That was massive. But in all honesty, I don't think I'll look into this too much, because as they clearly mention, home deliveries really drove these eclipsing results, and so when lockdown is over, are we really going to be seeing the same behavior? I don't know. We'll have to wait and see, but I don't think we'll see gains as big as these once we're all free to move out and about and we can actually start going to retail stores to buy our own stuff instead of having to rely on home deliveries. Alright, so moving on to our biggest winner this week, we have I can't even say that word, Qualcomm, who also had a good earnings report powered by the sales of its chips used in 5G devices, plus they also reached a licensing settlement with Huawei. Is that how you pronounce it? Huawei or Huawei? I feel like if you add an accent to it, it sounds even better. Huawei. So yeah, they reached a settlement with Huawei, which saw them pay, this is Huawei of course, pay them $1.8 billion in the fiscal fourth quarter of the year. Essentially just putting more money in their pockets. And while Huawei, I can't say that word anymore, it's just sounding weird. And while that company, beginning with H, is still barred from buying Qualcomm chips under US regulations, it has now resumed paying licensing fees for wireless technology, Qualcomm said. And Qualcomm will also be selling chips to Apple after their legal battles were also resolved last year, which will help generate more revenue for this company. So all in all, a good week for Qualcomm, and the reason why their share price has surpassed the $100 mark. Is that the first time? Yeah, I think it's the first time. So they're at an all-time high right now, and the reason why it's increased nearly 20% this week. So as I mentioned before, a lot of tech companies reported earnings this week, and for the most part, I think a lot of people were shocked by the magnitude in which companies beat them. But I think most people were also expecting the companies to beat the analyst forecast. And although most of them made gains in the extended hours of the market as well as the following days, Alphabet or Google actually fell, as it reported a decline in ads earnings for the first time. So you can see here this week Google was down 1.9%, while the likes of Amazon is up 5%, Apple is up 14% at new all-time highs. But yeah, because Google had declining ad revenues for the first time ever, we can see why it has dropped nearly 2% this week. Apple also mentioned its 4-for-1 share split. I don't know what that means for people that have fractional shares, because I read on the forum that those won't be split, so I'm not really sure what's going to happen there. But PayPal, if I go to PayPal here, if I can find them, also had a good week, reaching all-time highs as well. This section right here kind of scares me. It's pretty much a steep gradient, as we can see here, which kind of puts fear into me and just looks like it's going to drop a bit, but now it's trading in the 190s. I feel like it's going to burst through that $200 mark anytime soon, and this week it's just solidifying its status as the biggest overall gainer in my portfolio, giving me an unrealized turn of around 60%, which is great. But I just want to wrap up this video by taking a look at Kodak after it surged up 300%. I think at one point this week you were actually able to say that the share price had gone up over 1,000% in a matter of 2 days, which is crazy. So this move came after DJ Trump said that they'll be giving a $700 and something million loan to Kodak to produce pharmaceutical drugs, including those to fight COVID-19. And I think this is with the intention to make the United States more independent and stop relying on other countries to produce pharmaceutical drugs for them. It's crazy that a company that filed for bankruptcy in 2012 after failing to keep up with modern technology is now essentially being revived. And above all of this, I'm seeing Kodak's CEO took out options. I'm not 100% sure what options are. I'm guessing that they're similar to CFDs on this side of the world. But yeah, he took out options a day before this whole thing happened, which, if you ask me, straight up looks illegal as hell. The guy has made $30 million off of it too. And I don't know what the rules and regulations are around these things, so I don't want to speak too much about it. But to me, on first glance, that doesn't seem right. But on that note, I'm going to wrap things up there, and I'll catch you in the next video in a bit.